What is up? Hope you guys are doing okay. We're gonna do a market update today. Things are kind of settling down, a little less volatility. I believe we're seeing a little bit of a bounce for BTC, but nonetheless, we're gonna do a market update of all of crypto, kind of see where things are at, get a feel for where we're going, ideas like that. And so today is gonna be a pretty chill one. But the biggest thing is I want to help everybody understand how to look at the future of crypto in a sense of, okay, what's my plan? My biggest thing is preparation. So in order to know where you want to go, you gotta have some things, basically, build upon a plan week by week, month by month, and you see it through. And so as we look at different price action and we kind of look at some different coins, et cetera, we want to say, hey, how are we going about our plan? What are we doing? And can we achieve the goal that we set for ourselves? And within crypto, when you spend time, and we're not talking about a couple months, but you do it month after month after month, year after year after year, what you'll see is you'll start to see some magic happen. Now, was it a rocky road sometimes? Yes. But with that being said, this is the value proposition. This is how you get the X's, the multiples on your money, when you could stick it through the tough times, especially when markets are down, and use them as great buying opportunities. And that's exactly what I believe that we have now. And so let's dive in. We're going to dive into some stuff and kind of look and see where we're at. So let me share my screen and let's get into it. 1 second. Da-da. All right. So first thing is first. Let's take a look at this heat map. So as of right now, Bitcoin is on a bit of a bounce, which is nice to see because we did have some capitulation last week. And when we're in a bear trend, that's what you'll see. Week in and week out, month in and month out, you'll start to see a decline in price. But then when things get very fearful, which we'll take a look at here on the Fear and Greed Index, things just get pretty bearish. But nonetheless, this is that time where we enter that accumulation zone. And this is where the profit is made. People who are investors during this time and understand the ebbs and flows of the market, those are the people that make out like a bandit. And that's us, right? And so as we kind of look at, the heat map here, and we'll zoom in kind of here on these other portions. We have Bitcoin with a dominance at 42%, which it's actually losing a little bit of dominance. So that's actually a good thing because that's kind of saying, hey, some of that liquidity is kind of flowing back into some of these other coins. But right now we're at 21K. And so in the recent week, we had a capitulation event that brought us down to 17K. And so with that being said, if you DCA during that was great. But nonetheless, when we're below 25K, you really got to start looking at, okay, where's the value? Where's the risk reward at? Would you, and just ask yourself, would you want to be a person that was only buying Bitcoin when it was 50K, 60K? Would you want to be a person that's only buying Ethereum when it was 4K, 4,500? Or are you the person that's buying Ethereum at 1,100? Are you buying Bitcoin at 20K? And so this is the accumulation range, right? Where we see it drop below its realized price, especially Bitcoin. And as we look at some of these other coins, so Solana, BNB, DOT, right, Ethereum, some of these coins that have been able to say, hey, they're trying to prove themselves to be major coins that are going to be here, especially in the next cycle. And these are the projects that we want to look at. And so, but we know two are solidified, Bitcoin and Ethereum. So Ethereum has a lot left on, I guess you can say, the growth curve to grow quite more compared to Bitcoin from a return aspect. But nonetheless, there's still credible value proposition for these other coins. And so Bitcoin is at 21K. So that's a little bit of a rebound up from 17K. We've been kind of ranging, and we'll look at the chart here in a second. But we've been kind of ranging in between that, that 20 and 21K for the last few days. And Ethereum. So Ethereum popped back down to about 900 bucks, like a little bit less than 900 bucks. And Ethereum's been ranging as well. But green day so far for crypto. And with comparison, we've also seen a green day in the stock market as well, which we can take a look at. And so Ethereum is up more than Bitcoin at 8.5%. Bitcoin is about 5.5% up for the day. BNB up 6.5%. Solana is up 10%. Okay, it's a little bit of momentum. DOT is up. Let's see if we could zoom in there. DOT is up, looking about like 4%. And so let's take a look here. So we got AVAX up 12%, Near up 7%, VeChain is up 5% here. We got Rune, really likes a lot of what Rune had to offer. Biggest thing here is use case. When you go to the site, when you go to do your research, is there something that you can actually do? So Rune, obviously, it's a place where you can go and get yield, and native yield. So that's the interesting value proposition. And so Rune is up 22% for the day. Pumpamental, right? Coins that have good pumpamentals have this capability to do this in one day. 22%. So that's looking pretty good. Okay, let's kind of see if we can. And Ripple, I've been looking at some interesting news here. So Ripple, XRP, XRP has been here for a long time. Now, with Ripple, they are making ground with their case against the SEC. And as the year kind of goes by, more things are unfolding, and it looks like they are winning this case. And so that's going to be very positive for them. As we know, they've been a top 10 coin for a very long time, made it through, bear markets already. So not going to discount Ripple, right? ADA, obviously they're building. Charles Hoskins has been building slowly, but they're doing something in terms of, hey, the goal is network effect, similar to what Bitcoin and Ethereum has done, and none effect, just getting a product, basically code that is just reliable every single time, no issues. And that's what it's all about, guys. What is the code that works? Okay, and then so we can kind of dive in. So we got our stable coins, right? Obviously building up a lot of market cap, so taking a lot of that market share. And then let's kind of dive in what we got here. So if we kind of look in, we got Mana. So we kind of look into the GameFi here. So we got Mana up. So Decentraland about 6.7%. Sand up 8%. Sandbox. And let's take a look here. We look into Aave. So Aave, Ethereum-based coin, ERC20. Lending platform up 7.9%. Phantom is cheap, guys, and it's a blockchain that just works, fast, high throughput. It works, and so Phantom is at 27 cents, and not too long ago it had a high of above $3. So do the math. Just to get to all-time highs, do the math, right? A lot of X's just to be able to get back to where it was, and so if you believe that BTC will get back to where it was at some point, these other altcoins who stick around will do the same. And so that's why I say do the math, because Bitcoin back to all-time highs gives you about a 3x. Now Phantom, let's zoom in. Let's take some time. Take some time and go over it. So if we go, and where's Phantom? Where did I see Phantom? So if Bitcoin to get back to all-time high is a 3x, so from 20,000 to about 60,000, give or take, it's about 3x. And I said Phantom's all-time high was about $3, and it's right around 30 cents. And so do the math, divide $3 by 30 cents. What do you get? 10. So 10x, and that's just getting back to the all-time high. So weigh the options, right? So like I said, and this is a top 100 coin here. And so, let's continue looking. So we continue to look at these other sectors. More GameFi. Gala is up about 6%. HNT. So Killium, interesting value proposition as well. Up 2.6%. Have my eye on that as well. And so what else can we see here? And really, the thing is, once you start getting into like this small stuff, you just got to say, okay, smaller cap. That means smaller drawdowns, especially if we're going the downtrend. But same thing, if these make it through a bear market, we want to identify the ones that have the value proposition. And I see one right here. So coins that have good fundamentals. Mention I said Arun earlier. Look at this one here. Would like you guys, if you have some time, do some research. 16% today was for a reason. And so just imagine if OpenSea actually had a coin. This is what Lix is. ERC20 token on the Ethereum blockchain, and they have a whole marketplace for NFTs. Pumpamental, 16%. And I have my bags packed here. And so, not financial advice, but just pay attention to the coins that are able to do, high percentage gains in a day, and then say, hey, can I attach some use case to that? And typically, those are going to be the coins, from what I've seen, that have a better chance at making it through a bear market, but then being very, very bullish in the bull market, right? And so, overall, what can we see? We can see a pretty green day for crypto, which is pretty good. So let's move on. Let's take a look here. Let's take a look here at the fear and greed index. So how is the sentiment looking for the day? So last week we had a low that we haven't had in a long time. We had, I believe it was like a 6 and a 7. So last week was a 7. And today we are at 11. So sentiment is getting a little bit better, but you really can't say we're bullish until we see a reading of 40, 50, and especially once we get above like 60, then that's when you can kind of say, okay, people are feeling really good about crypto in general. But when we're below 25, right? When we're below 25, that's normally saying, hey, people are still very bearish, meaning there's still some sell pressure still left in the market. And so, but also that's also saying that there's not much demand as well. And so I think this is a better indication on what demand is, to be honest, is because when people are feeling good, that means there's demand there. And so, as we can see, you can kind of see this cluster. We're at 7, right? And then we've been lingering down here for some time. And so what you notice is when we're lingering down here on the fear and greed, yeah, if we stay here for months at a time, what have we seen in the past years, right? We stay here for some time and then we rock it up. Stay here for some time, we rock it up. Stay here for, so this was a elongated time and a bigger spread. So this was in between 24 and 12, but nonetheless, rock it up until things are more optimistic. And typically, when the fear and greed index is higher, that means price is going up as well. And so, same thing. We're down here for some time, and so the question you have to ask yourself is, can you see what's going on? This is important to understand. All right, cool. So let's hop over and let's look at the chart for Bitcoin. And actually, really quickly, before we do that, let's go look at CoinGecko. So at CoinGecko, same thing. We're going to take a look and see where things are at. So similar to that heat map, and we're going to look at a numerical order in accordance to market cap and look at these coins. So if we just were to take a snapshot of the top 10, try to ingrain these in your mind. Like literally, it would be nice to memorize these. And as we look week by week, see how they shuffle and see what coins get knocked out of the top 10, what coins get added to the top 10 through time. So we know these two, they're going to be 1 and 2 for quite a bit of time, right? Look at the market cap, 400 billion, 138 billion. We got 2 stable coins, so these are equal to $1, that are gaining ground, especially this one. BNB, stable coin, Ripple, Cardano, Solana, Polkadot. Top 10. Remember those. They're going to be important. Year after year, coins that stay in this top 10 will get pulled up with the market. And as we know, with trillions of dollars coming to this market, these prices, so BNB being 200 and something dollars, Cardano being 47 cents, $37 for Solana, $7 for Polkadot. As the years go by, right? Similar story. Just think about it. Ethereum at some point was 47 cents. Ethereum at some point was $228. Bitcoin at some point was $37. You guys get the gist. The coins that have staying power, use case, network effect is a thing. And so that's what I want to talk about, is just developing a strategy to understand how to tap into the network effect. But top 10, that's what we have here. Okay. And so as we kind of go down, you have your layer ones, you got your layer twos, right? Polygon. Big day for Polygon here, 20%, give or take. A nice week for Polygon, so 27%. Let's click in it and see what they got to show us here. And so the interesting thing about Polygon is 80% of its supply is out. And so, as more supply gets out, that's saying, hey, this coin is more established. And let's take a look. And it's kind of been like a stair step. Had a big, altcoin summer in early January, and it's kind of just stood sideways. So if you're looking at it from an Elliott wave perspective, right? Exponential, sideways. What's after that? Exponential. And so, interesting. Cool. All right. Let's see what has done well today. Can we take a look at that? So in the top 100, we've had AVAX with 10%, Polygon with 20%, thereabouts, right? Cosmo 12%. These are all coins that have use case, right? That are making some progress here. Anything else above 10%? 10 set, don't know too much about that, but up 33%. If you guys know about this coin, I'd love to hear about it if y'all have some information on it. But as of right now, it looks pretty new, especially being in the top 100. It looks like it might have came out of nowhere, but up 33% for the day. Like I mentioned before, Thorchain up 20%. Anything else? Anything else? That's about it. Okay. So really quickly, let me check the chat. Let's see who's in here, and let's talk shop really quick. Ah, can't see the screen. I'm still new at this, guys. Let me share the screen with you. I might have to go through all that one more time. Let's run it back. Let's get it right. Let me know if y'all can see this. Share screen. Can you guys see that? Let's see here. Can you guys see that? Okay, cool. So you guys can. Let's see here. Can you guys see that? I got echo, reverb. There we go. All right, so we're good. Let's go back to it. All right. So to recap what I was saying before, cut, restart. Anyways, so BTC, we're having a good day. About 21K. Cliff notes of what I was saying before. We've been ranging for BTC between 20 and 21K. And creating a plan, right? And so accumulation range, I believe we are starting to enter that territory. And so just some other coins, if you look at the heat map, we got Solana up 10%, BNB kind of doing this thing in the middle of the pack. Ethereum, obviously, about 8%. And I was just kind of, talking about some math here. So Phantom, all-time high was about $3 and some change. It's at less than 30 cents. So to get back to all-time high, looking at a 10x compared to Bitcoin, you'd be just looking at a 3x. And so that's just looking at the heat map. So that's the cliff notes on that. Going back to Coinbase, top 10, getting them ingrained in your mind, like memorizing them, I think is really important, and to see what comes in and what goes out. And so what we've seen, there's been a fight here between Dogecoin, Polkadot, right? DAI, stablecoin, right? If you look at these market caps, they're all very similar. So Dogecoin, Polkadot, and Solana kind of came down. It was at a higher position, but pay attention. Bitcoin and Ethereum, they've been top 10 for quite a bit of while. I would, say healthily that they'd probably stay there for a little bit more time before any real competition. These are stable coins, BNB, stablecoin, Ripple, Cardano, Solana, and Polkadot. So top 10, and they all are carving out their own niche. So very interesting. Okay, so with that being said, let's dive into the chart for BTC. And so I've got some interesting things to kind of bring up today. Really just, okay, so as we look, obviously up and to the right, that's the main thing. And I think there's a big thing to talk about, which a lot of people were kind of saying, hey, this has never happened before, how Bitcoin intruded on its previous all-time high in price. And so I think that there is a lot to talk about when it comes to that, because, with a lot of these principles that I, like to follow, and they've been very, very helpful to look at just price action through time, especially with Elliott wave principle, is looking at the differences between an exponential fifth wave and a truncated fifth. And so if we kind of do a recount, or let's just kind of talk about this, right? So as we've seen these previous cycles, so let's kind of put this to the weekly, and we are going to hit it like that. So you guys can see how we have a clear 1, 2, 3, 4, 5, an exponential fifth wave, right? Bear market. Same thing here, 1, 2, 3, 4, and this exponential fifth wave. So from here to here, that's exponential. Now here, we did not get that. 2, 3, 4. We had a truncated fifth. And so that says a lot, because when you really look at it from that perspective, when you have a fifth wave that's exponential, and so let's say we take it from here, and you have a fifth wave that takes you up an additional 400% plus, this fifth wave that takes you up an additional, 1,500%, a drawback of 80 or 90% is not going to bring you back. I'm talking about price wise, right? Because think about it. You're going from, 1,300 and you go down 90%, give or take 80%. That leaves you back in the mid 200s. So look at that from a number standpoint, not just a percentage standpoint. That's why it's very hard to, penetrate, previous price action. So same thing here. From a number standpoint, you're literally going from, 4K all the way up to 20K. And because of that exponential fifth wave. And so coming back down 85% from a number standpoint, that's only bringing you back down from, so we're going from 20K to 3,000. And that exponential fifth is what helped you do that. And so we did not get that, right? So for this wave 5, because, it's clear that we are in a bear market. So for this wave 5, it's truncated. We barely wicked up from this wave 3. And so if this would have been exponential, like previous years, for example, and let's just say we just got a nice, 300%, right? And so let's say we were able to get up to 125K, which a lot of us thought that was going to be the case. But, when the market speaks, it speaks. And so if that would have been the case, like previous cycles, getting that exponential fifth, a 80% pullback, right, is right there, 22K. And so even if we make it very similar to what we've seen before, 400%, right? That gets us in range with other bear markets as basically not penetrating previous highs from, the tops of other bear markets. And so the other thing is, so that's one reason why I think that we're penetrating that, and we have the, the probability of potentially going a little bit lower as well. But simply also because of diminish returns. And so I think a big thing is, looking the Bitcoin and looking at the logarithmic growth chart, and we can see how just through time, especially for Bitcoin, as the market cap gets higher, you are not going to see, you're not going to see, exponential returns like how you did when it was younger. So how you can see, this is more vertical in nature. And, you know, as time goes on, how you can see this is getting horizontal, which basically means these downtrends, I guess you can say from a percentage standpoint, look to be very similar, whether it's 85%, 75%, right, within that range. And then so with things being more horizontal, it's just only natural for us to start to get closer and closer to these previous highs. And so with that being said, even here, right, since we did not hit that top on the log growth curve, so for example, even here, it had us an estimation. So if we were to continue November and kind of estimate that out, yeah, it had us hitting the top here at about like 150, give or take. And that would have been early this year. But when the Fed stepped in November and said, nope, we're going to start cutting rates, QT, that stopped the momentum. Liquidity started getting pulled. And so I think that had a big reason for why we did not have a exponential fifth. But nonetheless, that gives us a lot of understanding of why we are already encroaching on previous highs from last cycle. And so that's kind of just addressing that. But in other words, so what I had here is a regression band, and we're just going to look at, how we can use this regression band to see the price ranges and fluctuation for this downtrend. So what we'll do here, we'll grab this and we'll start the top of it, and we'll just take it to where we are today. And what it'll do is going to plot out the upper portion and the lower portion. And so what we're seeing here, let's get that straight. So what we're seeing here is, we're bouncing off this lower portion. We attack that median line. Matter of fact, let's put it on the daily chart so we can get a little bit more information. Okay. So interesting thing is, so we're on top of it. We cut through it. We just tap it. And then we ride the bottom of that median line. We get on top, ride the bottom of the median line, tap the bottom of it again. And we play with this median line. We go to the top and then ride the bottom of the median line, got a little bit below it, and then, we capitulate down. And so we've seen capitulation mainly here and capitulation maybe here. So capitulation sideways, capitulation sideways. So the question is, let's see what's going to happen for, really the rest of this week and next week. Are we going to get that sideways action like how we got with this capitulation as well? And so kind of what we can do here is this top here, we'll look to see if there's any momentum swing. So we'll see somewhat of a momentum if we get a daily close above this 22.5 range. And so let's put a price call there. So just have your eyes open, say, hey, we may get what we call like a recovery rally. Not saying that we're just going to be straight bull mode, but with these downtrends, you do get a little bit of a recovery. And that's kind of what this was here. We had a downtrend, but then we had a recovery for some time before we finished, continued on with the downtrend. And so, from an Elliott wave perspective, this is a clear 5-wave, right? So if we were to count this, and there's a couple different ways, 2, 3, 4, 5. That's one count into an A. Clear A, B, C. And the question is that C all the way in there? So count here for this portion, easy to see. 1, 2, capitulation, 3, 4, and we're gonna see if that's fully in there. And so that's just kind of a outlook on how this is working out so far. So that is one interpretation of how we could look at this count and say, hey, maybe this bottom is in, or instead of it being an ABC, it may be a full 5-wave sequence downwards. So what that looks like is a clear, right? 1, 2, 3, 4, 5. So that count will be 1, 2, 3, relief, 4, and then one more trend down later this year for 5. And so we're gonna see, right? If we do have somewhat of a relief rally, and what we do want to see, and those are two different counts that we can kind of look at to start that process. We'd want to definitely get above 22 and some change. And so really, if you kind of look at this regression band, same thing, we're going to see that hopefully coincide in that timing. And so we'll kind of pull this out. And so as far as timing, especially with this next cycle coming through, the question may be, did we have an early cycle with this capitulation here? So if we pull up the 60-day cycles, and thanks to Charlie at Cultivate Crypto for really highlighting the usefulness of 60-day cycles, we take a look at the 60-day cycle, and we got past day 30, and we had a low, and we're kind of just creeping up. So through time, let's see here, what is that? That would give us a day 37, right? If I have a count corrected, correct. Yeah, that would give us a day, at least like what, 36 or day 37, which doesn't happen that quite often. But if I remember looking previously, it's been in the 30s a couple times. If I remember throughout the years, not many. And so typically what you do see is somewhat of a little bit of a rally after that. But nonetheless, there's still potential that, this cycle is not done yet. And so we're going to look in between, late June. So we're encroaching on that now into early July and seeing if we have a little bit more for the action. So the two levels that we want to pay attention to is just mainly the bottom. So these bodies, so this portion here and this portion here. So these two candle bodies here. So let's get that accurate right on that price call, 22.3, and this price call here. So we're going to see if we range in between 22.3 and about 19K. If we range, then that's probably going to mark that this is, the bottom for this cycle. If we range and we start getting close to this 19K day after day, and then we dip through this, likely is we're going to have another lower low, and then the 6-day cycle low is going to be later on, potentially in early January. So we'll take a look for that. But really, if we start to get bullish above 22K and we start to range above that, then that's going to give a little bit more credence to that low being in here. So nonetheless, just look at it. So throughout the next week, if you're on your DCA schedule, right, anything between 22K and 19K, right, is below what the realized price, obviously for BTC, I'll say is good eating. And so it's not bad. And so from there, yeah, that's what we're going to be looking for. So outside of that, I just keep wanting to highlight the major support levels that we do have. So if we kind of come over here, so let's clock that off. We'll look at the major support levels and we'll bring that up. And so we'll throw on the volume profile, and what do we see? So let's get all that data in there. Okay. All right. So the big one here, 12K. That's like, there's so much support. There's a lot of people that bought down here from last, I guess say not even just last cycle, but even at the beginning of the cycle that we are kind of regressing from now, right? And so a lot of price action that happened here, a lot of strong hands here. Now, With that being said, previous all-time high here, psychologically, right? On the way down, I think that'll give us a little bit of support because, mind you, we wicked below it, but we did not sustain that. So that's going to serve as some support. So with that being said, here, let's make these ones green because these are, I'm sorry, red. Let's get a little differentiation between those. Cool. No, this one's green. And this one is red. So the red is like the short term, just prices to pay attention to. These are grand scheme of things, prices to pay attention to. And then so for us to get back bullish, right? For me to say, hey, we might be able to get in a somewhat of a sustained uptrend, not just for a couple days, but for multiple weeks or multiple months, we'd really need to get above 32K. And so with that being said, see, we start to have that ledge right here. We're at the 17K range, so 16.8. That ledge start to be built of this volume here in this area. And so yeah, so those are the major support levels that I think that we still have. 19 and some change, 16 and some change, 12K. Short term cliff notes, we're looking at, does price penetrate either of these two levels? 22 and some change, 19K. Okay, so that being said, that was some quick TA. Let's take a look at the RSI on the weekly scale and then also the MACD. Oh, and we'll pop on the Bitcoin risk metric just to see, okay, what's the risk reward looking like? Still on the MACD as well. Okay, so let's click into the RSI. I'm going too fast. Let me know, I'll slow it down. But with the RSI, we have reached a level that we have not reached ever for Bitcoin. So not saying anything, but just pay attention. Uncharted waters typically means, well, I'll just leave it at that. Don't want to sway anybody in one way or another, just going to present the data. So with that being said, we are at a very low level, and just look at the anatomy of these downtrends. So same thing, higher high, higher high, higher high. So higher high, higher high, higher high, higher high. Same thing, lower low, lower low, lower low, lower low, lower low. And just look at the trajectory there. Same thing here. I'm sorry, lower high, I said that wrong. Lower high, lower high, lower high, lower high, lower low, lower low, lower low. That's correct, excuse me. Okay, back here. High, lower high, lower high. And this one was a fast capitulation, a little bit more sideways than, secondary capitulation. Same thing here, lower low, lower low, lower low, lower low. Check the anatomy, and then same thing here. And then so I like to call this like the round trip, a round trip, low to high, low to high, right? So we even got a low to high here. So low, the next portion, doesn't matter how long it takes, year, 2 years, we will do a round trip to the upper portion of this metric. That is going to happen. I can say that with a lot of confidence. Now the question is, how long is it going to take? And you have to ask yourself, are you a trader? Are you an investor? Investors understand that they're just going to try to accumulate the asset and let time just pass. And so we're going to get a round trip to where we go above this metric again, and we get overbought above 70. So that's what we're investing for. So we can then take profits there. And so, with that being said, if you look at the anatomy, very similar trajectory, right, with the trend. And then so what we're going to look for is a breakage, right? So if we kind of line that up as best as possible, same thing here. Just line up our touch points. So line up these two touch points Boom, bring that across. Same thing here, line up touch point, line up touch point. So that's, somewhat of the trend there. What do we want to do to say, hey, things are starting to look a little bit better? We want to break this trend line here on the RSI, right? So that's how we use this information to our advantage. And so, as we continue to muddle around here, for us to say, hey, things are going to look pretty bullish, we want to break this trend line as well. So I'll keep these here, and then we'll check back in the next week, the next month. Same thing on the MACD. So we still have some bearishness. So as we can kind of see, we went back into that dark red, which is signaling to us that we still have a lot of sell pressure or sell pressure still at play. And for that momentum, because this is really good for seeing momentum swings. So when we go from dark red to light red, and then we hop into that green, from that light red to that green is that nice momentum going to the upside. And then so when we sustain green, that's a bull run. So we sustain that from mid-April to 2020 to mid-April of 2021. So that's a year bull run. So how do you know when we're in a bull run? When you see this basically is in the green at considerable amount of time, not just a couple of weeks, but months at a time. And so that's what we're going to look for here. After we've had a whole bunch of red candles, we see the sentiment start to change. People come back to risk on. The Fed is going to be a big determinant on that, on what they do with their policy. Liquidity gets going. We get this inflation down. We want to see these red candles get smaller, turn into light red, and then flip to green. And then that's when we'll see that, that bullish run, whenever it may be. So this is what we're looking for, time periods like that, which we're not there yet, but we may see it, coming up. 2023 is just around the corner. 2024 halving is just around the corner. So we'll look to see some good data come through in the next year, year and a half. So that's just BTC. Okay. And last thing, let's look at the risk metric. So same thing here. We are looking at the times where Bitcoin has been the most risky. And as you can see, it's been the tops of markets. And so this metric has been really helpful for me because typically, I start to really pay attention to the market when we've been below it. And legitimately, I stop my DCAing, and this is just me. I stop my DCAing when we hop above it. And then so if you go back to May 2nd, right? Or let's just go here. So January 10th is when we first started to pop below it. So where was price? January 10th of 2022. And so for that time period, so it was a little bit hard to see if we were in a bear market because there was the case to say we still had support here, with previous price data. And then so during this time, did a little bit of DCA. But when we started going back up, I stopped. And then once we got well below this risk metric, that's when I started to look at this market again. And then so stayed away from doing any purchasing up here, stayed away from doing any purchasing up here, too high on the risk. So this metric is very helpful to use. So we pop back down into it, we're hitting levels that we have not seen. And we're kind of, popping back up recently within the past couple of days. And so this is similar to what we experienced. And this is basically saying this is the least risky of an investment into Bitcoin that we've had since really 2018. So that's a long time. So that's a good thing to say, hey, are you a long-term investor understanding all these metrics and what are you going to do with this information? It's up to you. So is there still downside potential? I'd say yes. But long term, are you going to really care about buying Bitcoin at 21K or 12K when that risk metric gets above, right, this 50 and it goes into the red? The RSI goes above 70. This MACD is flipping green for multiple months at a time. Are you going to care? I don't know. I don't think I will. So the biggest thing is, do you understand the game of accumulation at good prices? So we can pop all that stuff off. And I did want to look at a Fibonacci retracement and kind of see where that's at. And last time I looked at it, we bounced right off of it here with that 17K wick. And so we take the bottom of COVID dip, we take it to the top. Yeah. And so if you look at, things from a Fibonacci retracement standpoint, we basically wicked right off of it. We touched it. We kissed it. Mwah. All right, cool. Now it looks like, as the candles come through, so we got 3 more days for this week. We're gonna see what's happening. Are we getting red candles? So we have a green candle so far, but I'd venture to say if this closes red, then we have a good capability. Like I was saying, in between these two prices, we have a good capability of breaking this, but then testing this fib level once again. And so we'll see that. Okay, and so like I said, this level here, we got these tops. We came back down. The fib level for that is 13 and some change, which is, really close to that volume profile, 12 and some change. And so, yeah, all this stuff is creating a picture for us so we can see where could we go. All right. And so if we were to kind of look at things at a tighter angle, so let's get this out the way. So this is the 30-minute chart. So if we want to be real nitpicky on price to say what's going on in the very, very, very short term, we wicked back down and then we are kind of trending back up. So we'll see if we can sustain that and then hopefully break this. If not, then we'll range. And so for us to be bullish, right, and to kind of see us elevating, we take this top here. So we can take that top, bring it down to that low, and see, are we ascending these levels? And so what you'll notice is we'll bounce. And so what we've done, we came up and it looks like we got rejected by golden ratio at 618. Kind of came back down 382. Almost got back up because really, truthfully, now if we would have gotten back above this 782 or at 786 and used that support, there would have been a large case for us to be bullish, because typically when we have a downtrend and we get back above this level, getting back above, the point of where the Fibonacci retracement started is very likely. And so we didn't quite do that. But we came back down, settled in at about 382, bounced off of it, and let's see if we can make that happen. So same thing. If we can get past this 786 Fibonacci level, 21K and some change, there is a higher likelihood that we're going to break this resistance and be bullish, which that could be the beginning of the relief rally. So doing this type of research helps us understand how do the rallies derive. And, that rally, right, would be something nice because the price target for that rally would bring us to 26K. And so using these tools help us understand that. And so I'll make a little box there of, what we potentially could be seeing if we have some demand that comes back into the market, right? And so, and that's going to highly be correlated with stock market. So really quickly, let's take a look at the SPX. So same thing, and same thing in the regression channel that it's in. And so it's kind of coiling. So this is the 30-minute chart. But what we can see here, this has a lot more ground to make up, right? Even to get back to like a previous high. Or, well, no, actually, let me go back to the Bitcoin chart. Well, no, I remember. So really, this is actually a bit above Bitcoin. And so this is the point where the S&P has to beat to get pretty bullish on somewhat of a rally upwards, right? In the short term. And so with that being said, we do that same fib retracement from that top to that bottom. And okay, so here's, the comparison. And so let's just get that correct. Let's get that correct there. And so same thing. This is kind of, all this stuff makes sense, guys. So it has broken through the golden ratio. It's been using it as support. It's bouncing off of it, but it's struggling to get past this 786. So the key thing, like I was saying for Bitcoin, If we are able to break this 786, this is very highly like the probability gets much greater to be able to say we're breaking through this, level here. So this is at 38.20 and saying, okay, cool. We're going to see a little bit of a rally for the days to come. And that price point level, right? So you don't only want to use Fibonacci levels. So you don't only want to use this, but you want to look at the volume and see, okay, well, we do have a bit of volume here, so still the volume profile on and say, okay, so we'd have to break through this level here. And there is not much volume here. So not much resistance. So at minimum, if we are able to break this 786 and use that support, there is a good chance that we would have a nice little relief rally. So for the S&P, that will take us up, from 37.95 to 38.95, which is pretty decent, for the S&P. What is that? A couple percent? Yeah, so about 2.5%. And then if we can break through this wall, right, that'll give us about 4.5%. So to put that in correlation to Bitcoin, that would be a nice, 20 to 30% gain for BTC. And so if we were to go back to BTC, let's see, what does a 20 to 30% gain look like? That's a little bit of a relief rally. So this is how this stuff gets figured out, right? So a little relief rally, right? So we'd want to break this level. And like I said, 20 to 30%. So somewhere in there. And so let's just do a conservative, 20%. And so this is why this box is here. And so this is what we're looking for. We've got to break this, but this is highly dependent on stock market. So, like looking at it like that, does any of that make sense? Let me check the chat. I know I've been just rambling and talking. Let me check the chat. Da-da-da. How do I utilize the metric comparing alts? What metric are you So what metric are you referring to? Let's see here. If you can put in the chat, I could answer exactly what you're talking about. Da-da-da-da. Cool. We are in here. Joseph, nice to see you. Appreciate you, man. Wade, what's good? Got some moon gangers in here. We're gonna have to make a new name. That's Charlie, and I mean I love Charlie. Cultivate Crypto. We're gonna have to come up with a new new name for Swerve. I'm gonna have to think of something. So if y'all have some ideas, I'm trying to think of a little bit more of a brand here. So that'll be coming in the future. Cool. Dave T, nice to see you. Let's see. Okay, so the question was, if we wick below an amount that would invalidate Elliott wave sequence, does that invalidate, or is it close point only, or wicks indicates very close anyway, so same. If you could expound on that a little bit more, Joseph, on both of your questions, I could try to answer that a little bit better. But I mean, for Elliott wave principle, so wicks are kind of subjective. I know some people, well, a lot of people just go off of candle bodies, really. And so it's really on the eyes of the beholder. Cool. Da-da-da. Da-da-da. But yeah, so for like alts, so if we kind of go back and look at some alts, using the same process to see, okay, well, what are the potential gains, even in the short term, is highly usable, right? So looking at the one, so let's do this, share screen. So looking at the Fibonacci levels, and looking at this volume profile. So let's look at, I don't know, let's look at dot. Da-da-da. And so we're on the 30-minute chart. And so same thing, this runs with Bitcoin. So if Bitcoin gets pulled up, this is going to get pulled up too. So same thing, you see this this is like pretty vacant when it comes to volume. And so the most recent high was this wick here. And then so if Bitcoin gets pulled up, this is going to get pulled up. So to see how well is it doing and its likelihood of breaking this, local high. Mind you, this is like within, a couple days. This is not like a major high because we're on a 30-minute chart. Just use a fib retracement here. And same thing. What did it do? It got knocked off of the 786 level. Saved by the 382, struggling against golden ratio. And so to project, if Bitcoin gets bullish above its price target, where will Polkadot go? Same thing. It'd have to break through this little bit of wall, but it very easily get back up to about $9. So right now it's at $7.79. And so fairly easy, right? If Bitcoin does what it's supposed to do, if it gets bullish, Polkadot will go back to $9. And same thing, if it breaks through this wall here, Polkadot, we will see, if Bitcoin gets bullish again, we'll see Polkadot get back to $10. So same thing, if you are a buyer today, that's going to give you a 30% increase conservatively. It's pretty good. And so you can do this, right? So let's go to Phantom. And so like if you're a short-term person, like if you're a short-term trader, which, I mean, I do some of that, but only a limited portion of my bag. And only specifically, like, for example, like when I know that there's a good low end. So like the other day, it's like this wick here. What Phantom looks to be like a little bit different of a story. So its local high is here, not so much back here. So, I mean, if we were to take a fib retracement, and that's pretty light. I mean, Phantom is, so here's why I like Phantom. I mean, because look at this crevice here. Not much volume in between 34 cents and 27 cents. Meaning, if Bitcoin gets back bullish, the likelihood of this pumping back up to 34 cents is very high. And so, for example, you're a buyer today, right? You're looking at 22%, which is pretty good, pretty good. But same thing here. So this one has pumped up a little bit more already compared to the others. Da-da-da. And so same thing when you're buying through this choppiness. So if you were to catch the low on Phantom, which was about 19 cents, but let's say you just got here, somewhere within this choppiness, you'd be up about 30%, and really no resistance if Bitcoin is, pretty bullish, up to about 34 cents. So you get a nice 60% gain if we get that relief rally, and that's a big if. And so for me, I'm a big believer in Phantom. Like I've been accumulating Phantom, even though there is some possibility of it going lower, but nonetheless, I'm a long-term holder, and at these price levels, I am a buyer, and I'm a buyer at 15 cents as well. So same thing with DCA, and then our DCA heavier, the lower we get. Da-da-da-da. And so that's how you kind of use some of this stuff. Same thing if we want to look at RSI. And so we're going to have to put that on a weekly chart to really get a good indicator. And then so Phantom on this RSI, I mean, same thing here, like I was talking before, to get back to all-time highs, looking at a nice 10x. Really, if you just do a fib retracement from, I mean, just look at the pumpamentals that Phantom, if you catch a pump on Phantom, you are a happy person. And that's why, and not just that, the fundamentals underlying in between what it does. It's an actual blockchain that works, an EVM that actually works. And so a lot of great yield opportunities over there as well if you know what you're doing. So same thing here. You just do a simple fib retracement from that top and even to the low of where we are now. Not saying that the low is definitely in. It could come a little bit lower. But look at the support. There's a big batch of support. Like I said, 15 cents. I am a buyer at 15 cents. Big batch of support there. Right? So let's say we do come down to 15 cents. And we just take it up. And we take it up to that 1.6 level. So that 1.6 level is a level that we often get to when we are bullish, right? So if you take any downtrends, take a top to a bottom of a downtrend, we normally, when we're bullish, get to this 1.6. It's just a matter of time. And that's a nice 35x for Phantom. So that's what we're in this game for. That's why we accumulate at lower levels. So same thing, like, has that happened before? Yes. You take any retracement. So take this top, do this, boom, hit that. And this, exceeded tremendously, right? So take this low. And even if you didn't catch the exact low, get a mixture, an average. Same thing there. Take it to that top of where it ended up going. You see a nice 47x. But if you were a person that got the exact low, you seen a nice 70x. Beautiful. And so that was from that low. So that high to that low. Same thing here. Do a fib retracement from this high to this low. And what did it do? It, boom. Fibonacci sequence. Tapped right here, 4.2. And so these fib levels are very useful because what did it do? Came up, wicked above it, and then got stuck right here at 1.6 before it finished out. And so getting to that 1.6 is when things are bullish, right? So in an up market, that's what we're talking about. Getting to that 1.6 is not unheard of. So same thing here. If you were a buyer today, get to 1.6, right? That's a nice 18x. And if we go lower to where a batch of support is, right? Like I said before. And that's why there is a big difference of being able to have the gall to, as things go a little bit lower, to still DCA when we're hitting bottoms of markets. And so interesting thing here on it's weekly, you see how this is kind of curving out, right? So as far as strength, basically saying, hey, this is looking to get some decent support even here. So you can see this cluster of price action here. And so, but mainly, yeah, we're hitting 15 cents. I am backing up the truck for Phantom because it's basically saying, because I'm willing to wait. If it takes a year, 2, 3, I am going to get 18x. I'm going to get 35x with the caveat of this still sticking around. I have the conviction to believe that Phantom will. So that's just me. And this is how I evaluate my crypto from a TA standpoint, and obviously diving into the whole ecosystem, which I think I may do a stream on how I do it. It's a little bit different vantage point, but yeah, I mean, I spend days, literally days, before I say, hey, this is a coin that I actually like the ecosystem. I don't just look at it for a couple hours. I spend literally days before I say, hey, I like this coin, And so, spending that time is worth it. So, yes, that's kind of utilizing the same Fibonacci retracements for altcoins. And then, so I don't know if the risk metric will pop up for Phantom. Let's see, it might. No, it's not going to pop up. I know it'll pop up for Ethereum. Let's look at the MACD. And so MACD, so this is looking a little interesting. So MACD is no longer dark red and is getting light red, and now these candles are starting to get smaller. So what is that saying? Potential flip to green. And so we need Bitcoin to do its thing for that to happen. Bitcoin's got to ball out. And so let's actually let's throw on the CC algo. Shout out to Charlie with the algo. And interesting thing. So we got 3 days left and we have a buy indicator on the weekly. So these weekly indicators are very, very powerful and they've been really, really good thus far. So same thing, caught the buy here and then second, buy and confirmation here. So if you paid attention to the algo at this point, got a nice 10x and told you when to sell. Then boom, same thing, told you to sell here. So gave you that note, say, hey, probably want to sell, which was accurate. And then even got a little buy for this little rebound here. So if you're a buyer at the close of this candle, we got a nice 30% gain. Same thing here. If we get this candle close, we'll see if that relief rally comes. And then so the biggest thing is, we'd want to really get above this 8-day moving average and then maintain it. So just like how we got above this 8-day moving average and we bounced off and maintained it, that's what we want to see for a significant rally. Now, I don't know if that's going to happen because there's, like I said, like a lot of macro pressure against us, but that's what you want to look for when you're looking at these charts, from a TA standpoint. Cool. All right. Let's see here. Cool. Yeah. So yeah, and validation is how you interpret it. Some people count the wicks, some people don't. Let's see here. Does the Elliott wave really work when the global economics are unstable? It seems that certain waves, i.e. 5, just don't happen when a recession. Yeah, I'd say, like, here's the thing. That term "don't fight the Fed" is a real thing. And so when they say, hey, we are legitimately going to start pulling liquidity from the market, I mean, there's not much, especially with speculative assets. I mean, because a lot of people see crypto as very, very speculative still, excuse me. And so with that being said, yes, Elliott wave principle is a basis to kind of look at trend. But if trend is broken due to external factors, right, you cannot expect to see a normal Elliott wave pattern. And so it does have some credence, but it's not the end all be all. I will say that. Cool, you guys. So that's about it. That's all I got for now. Hopefully that was helpful. Basically, we're ranging between 22K, 20K for Bitcoin, or 19K for Bitcoin. Let's see if we break any of those levels. If we break 22K, that might be a nice little rally. So that would be cool to see. Cool to see. But I'd also be happy if we go a little bit lower as well to accumulate some cheaper Bitcoin and Ethereum. And I may nibble, right? May nibble at some other altcoins as well. Cool. All right, you guys. So that's all I got. Hope that was helpful. If you guys have any other questions, don't hesitate to hit me up. That's it. Peace.